If you've been anywhere near your investing WhatsApp groups this week, you've probably seen one name popping up again and again. Indo-MIM, and the number everyone's whispering about, a gray market premium sitting around 40%. That's the kind of number that makes people sit up straight in their chair. But here's my question, and it's the one you should be asking too. Is this hype backed by an actual solid business? Or is it just IPO fever? Stick with me for the next few minutes, because I'm going to break down everything. The company, the numbers, the risk, and whether that GMP is telling you the truth or just telling you what you want to hear. Let's get into it. So first, who even is Indo-MIM? Because I guarantee 90% of retail investors have never heard this name before this week. Indo-MIM is a Bengaluru-based manufacturing company, and it specializes in something called metal injection molding, MIM for short. Now don't switch off, this is actually pretty cool. Imagine trying to shape a tiny, super precise metal part, like a hinge inside your smartwatch, or a component inside a surgical tool, out of a solid chunk of metal. That's slow, wasteful, and expensive. What Indo-MIM does instead is treat metal almost like plastic. They take fine metal powder, mix it with a binder, injection mold it into shape, just like a toy factory, and then heat it until you're left with a rock-solid, precision metal part. And they do this at massive scale. We're talking thousands of different component designs, going into cars, aircraft, defense equipment, medical devices, even consumer electronics. And here's the headline stat. Indo-MIM isn't just a player in this space. By installed capacity, it is the largest MIM manufacturer on the planet. That's not marketing spin, that's their actual global position. Okay, let's talk numbers because this is what you're really here for. The IPO size is roughly 3,800 crore rupees. Price band is set between 461 and 485 rupees per share. One lot is 30 shares, so if you want to apply at the top end, you're looking at putting in around 14,500 rupees for a single lot. Now here's something important. Most of this IPO is not the company raising fresh money for itself. The bulk of it is an offer for sale, meaning existing shareholders are selling their stake and pocketing the money directly. Only a smaller slice, around 500 crore, is a fresh issue that actually goes into the company's own pocket, and that chunk is mainly earmarked to pay down existing debt. Why does that matter? Because when a large part of an IPO is promoters or investors cashing out rather than the company raising growth capital, it's worth asking, why are they exiting now at this valuation? All right, the big topic, gray market premium. At the time of this recording, Indo-MIM's GMP is sitting at roughly 40% over the upper price band. In rupee terms, that's close to 190 rupees extra per share unofficially. If that premium holds, we're talking about a potential listing price somewhere in the range of 670 rupees, which would be a very healthy listing pop for anyone who gets an allotment. But, and I say this every single time, so you already know what's coming, GMP is not gospel. It is an unofficial, unregulated number that floats around in a market with zero oversight. It can be sky high on Tuesday and cut in half by Thursday. It reacts to sentiment, to subscription numbers, to random rumors in trading circles, not necessarily to the company's actual fundamentals. So use GMP as a mood indicator, not a prediction. It tells you how excited the market currently is. It does not tell you whether Indo-MIM is actually a good long-term investment. Now let's talk about how investors are actually behaving with their money, because that's more revealing than GMP chatter. On day one, the issue got booked around 80% overall. Non-institutional investors, the bigger individual players, came in strong, subscribing over 2 times their allotted quota. Retail investors were a bit more cautious, sitting around 70% of their quota. And the institutional buyers, the big mutual funds and insurance companies, were still sitting on the sidelines early on, which is pretty typical, since those investors tend to bid heavily on the final day rather than day one. The real tell will be what happens on day 3, closing day. If institutional demand comes in strong at the death, that usually validates the story. If it doesn't show up, that's a caution flag worth noticing. Let's get into whether the business itself deserves this excitement. For the last financial year, Indo-MIM pulled in total income of around 4,300 crore rupees. That's roughly 28% growth year on year. Profit after tax came in at about 533 crore, up nearly 26% from the year before. Those aren't small numbers, and that kind of consistent double-digit growth on both revenue and profit is exactly what long-term investors want to see, not just IPO week traders. On the debt side, the company's net debt relative to its earnings is quite low, under 1 times, which basically means they're not drowning in borrowed money, and the fresh IPO proceeds will shrink that debt even further. Now here's where I want you to slow down and actually think instead of just riding the GMP wave. At the top price band, Indo-MIM is asking for a valuation of close to 24,000 crore rupees. That works out to a price-to-earnings ratio in the mid-40s. That is not a cheap valuation. That's a premium price tag, and it's pricing in a lot of future growth and continued execution. Now, manufacturers do carry heavy depreciation because of all that expensive machinery, so the raw PE number can look scarier than the actual cash-generating reality. And compared to its one real global listed peer, Indo-MIM is actually posting far higher margins and better returns on capital at a lower earnings multiple. So relatively speaking, it's not the most expensive story in the room, but relatively cheap is not the same as cheap. You're still paying a premium price for a premium business. There's no free lunch here. Before you get swept up, let's be balanced. Every stock story has risks, and Indo-MIM has a few worth flagging. Number 1. Customer concentration. A small number of large clients make up a big chunk of revenue, and most of these are purchase order based, not long-term locked-in contracts. That means customers technically have the flexibility to pull back orders. Number 2. Export dependency. More than 3/4 of revenue comes from outside India, which means currency swings, tariffs, and global slowdowns can hit the business directly, and a chunk of raw material is imported too, so there's exposure on both sides of that equation. Number 3. Some pending tax-related legal matters sitting on the books as contingent liabilities. Not immediately alarming, but worth knowing about. So wrapping this up, is Indo-MIM's story exciting? Absolutely. World's largest player in a growing niche, strong repeat customer base, solid profit growth, and a management team that's actively cutting debt. Is the valuation demanding? Also yes. And is the GMP guaranteed to hold until listing day? Nobody can promise you that. My advice, as always, don't apply just because a WhatsApp forward told you the GMP is 40%. Look at the business, look at your own risk appetite, and remember, I'm not a financial advisor. This is information, not a buy recommendation. If this breakdown helped you understand the story better, smash that like button, subscribe if you want more IPO breakdowns like this one, and drop a comment telling me, are you applying for Indo-MIM? Or are you sitting this one out? Let's discuss down below.